A decent start, 2-1 advancing to declining stocks. The two big stories of the day, that China PMI, a little bit of softness there. That's a disappointment. And Google trying to figure out how much of an anomaly that is in the tech situation. A lot of complicated parts here with the earnings situation today. So just take a look at the big names. GE, decent, burned less cash than feared, but it didn't change the guidance overall. General Motors, okay, big beat, but 31 cents beat came from a stake in Lyft. That was interesting. McDonald's did okay if you include the income tax cost. They had global and U.S. comps that looked pretty good overall. I'd say that was not a bad number. Mixed numbers for the pharma. Merck beat, but only raised guidance very modestly considering the beat. Pfizer beat, but only raised by a penny. They had a 10-cent beat. Lilly, light on revenue guidance for the full year. See, it's down about 3%. See what I mean by mixed? Everybody's trying to figure out what Google means overall in terms of their ad growth slowdown. Remember, the stock's at an all-time high. It's back where it was in the early part of April here. So 8% seems like a lot, but it's had a huge move overall this month. Just understand where it is relative to where it was at the start of the month. The question also is, look at the rest of the tech earnings. Generally, this is a bit of an outliner. Tech earnings have been pretty good. Facebook and Amazon and Microsoft are pretty good. Okay, yes, Intel was definitely a disappointment. But by and large, big cap tech has been pretty good this quarter. The big question is, what's the trend in earnings overall? Keep your eye on the big picture. The big picture is we're up. Today, we're at the halfway mark. Half of the S&P is reported, and we have, as I predicted, moved into positive territory for the quarter. No earnings recession. April, early part of April, we were down almost 3%. Now we are up fractionally, thanks to the slow, big gains. People had cut their estimates too much in December, and now we're seeing we're beating by a little bit larger than a normal typical beat that we see. How about the sectors in April? Everybody keeps scratching their head trying to figure out why banks are doing so well. They're obviously, as you heard from Carl, late cycle plays, but with rates moving up just a little bit and maybe some hope that loan growth will be there, maybe you got it there. The big, of course, concern is healthcare down 3%.